All right, we are live for another edition of our weekly Friday market update. Every Friday at 12 o'clock Pacific time, I do a live stream and I go over several different things, different headline articles that I find that are very interesting related to the local real estate market. I go over the market data itself, so I extract it from most counties here in the Bay Area. I give you some of my insights. And of course, if you have any questions or you want anything, you want me to cover anything specifically, feel free to drop it into the comments. I always answer every single comment that comes in through all the social media platforms, or just send me a note if it's a private conversation that you want to discuss further. Never too busy to help more people. Without Before we begin, it's kind of amazing that we're already in September. It's Labor Day weekend just is right amongst us, just starting tomorrow. So it's time has gone by really quickly. And then I think this week here in the Bay Area, we're going to have some record high temperatures again, like 100 degrees. So quite interesting times that we are in indeed. Now, before we begin, if you or anyone you know is actively searching for a home, you're not happy with your current realtor for whatever reason, or you're just thinking of getting into a home, whether it's a trade up, whether it's moving from the rental space, whether it's selling to move somewhere else, love to help you and assist you every step of the way. It's been a really good year for me, and a lot of this content that I provide every single week on a consistent basis has helped a lot of people. So I'm very, very glad it has. And my goal is to just keep adding value and differentiate myself by doing all of these different exercises. So really appreciate you tuning in as usual. And let's get started. So there are two actually interesting corporate real estate development. For me, a big thesis of mine, I used to work in the corporate real estate space. And so at the end of the day, it's always about location, location, location for real estate. But that means several different things. And I had in many different videos of what does that actually mean? Everybody says it all the time, but what does it actually mean, especially relevant to the Bay Area? And a lot of it has to do with traffic patterns and proximity to work. So while there are two interesting trends that are happening, and I'll explain it in greater detail momentarily because I know why they're doing this. It's just really interesting to see. So let's take a look at Google first. So Google on September 1st had unveiled their massive mixed-use housing and office village in East Wisman, which is in Mountain View, which is where their corporate campus is. This is the plan and the dream of what they want to do. So they'll have mixed-use space, office space, retail space, but also building out a lot of housing. I think they're trying to help subsidize or build at least 1,600 houses in Mountain View, which is actually 1,800 houses in Mountain View, which is, there is no room generally for construction. So it's really, really interesting to see. This is also very important for a lot of people to understand. Notice what the big tech companies are doing with their corporate campus mindset. On one end, they are allowing people to be able to work remotely, work anywhere per se, but they are still extremely bullish on these very expensive corporate real estate areas. They even at this time, they're going to build roughly 1.3 million square foot of offices across 5 buildings. And so basically it's a redevelopment of their current space. And so what they're going to be doing is they're actually doing a net new 650,000 square foot of net new office space, right? So this is really, really important for people to understand that, sure, they have, a big as company that Google is, they still have the flexibility and they want to still build out their corporate campuses. They still see a lot of people will be moving into the office space. Otherwise, they wouldn't be spending all this money, going through all this time on redeveloping space. I mean, that's the most expensive real estate projects you can get. It's way cheaper just to rent out space in, existing buildings, but they're actually redeveloping space altogether. So it's really interesting to see this. And this is, and I'll comment momentarily. Now, this is Google's view. And here's what happened recently on a much smaller company, Octa. So Octa is based in San Francisco. They're letting most of their 2,600 employees work remotely permanently. Now, I looked on LinkedIn too. So Octa, while they have 2,600 people around the world, it's considered a, let's say, a medium-sized company. about 1,100 people are in the San Francisco Bay Area. So the key is it's significantly smaller. It's usually the small to medium-sized companies are the ones that are uh, allowing and extending these kind of remote work policies. And they're actually doing that for several reasons. So it's really important to see the headline articles and understand why they're doing it. For the longest time, these companies have had a really big struggle and challenge competing for talent against the big tech companies. The big tech companies for various reasons, whether it's good pay, whether it's the amenities and perks, whether it's incredible stocks, right? So the RSU packages are not just liquid, but also very strong. Like look at all the companies that you see right now: Facebook, Google, Amazon, LinkedIn, Microsoft, right? They're doing incredibly well. So it's highly valuable. So I suspect that small to medium-sized companies will continue to push the ability to work remotely so that they can start attracting more people that are not just in the Bay Area. Now, the big tech companies, on the other hand, are still very, very bullish on these major tech hubs because they're growing so quickly, right? So while they're growing very quickly in the corporate campuses here in the Bay Area, they're growing quickly in Austin, they're growing quickly in Seattle, they're growing quickly in New York. These major tech hubs, they're just going to continue to plant down and make really big long-term investments there. So something to be aware of. And the key as well is going to be interesting to see. While they're allowing people to work remotely, there's always a concern about how would people get promotions? How would people get, how would they actually progress with their careers? That's always a challenge, right? A lot of people know, like, even if you worked at Microsoft as an example, for a longest time, a lot of people, for them to really get that boost and to do, really interesting projects or to get known or for promotions, quite frankly, a lot of people know that they have to live in Seattle for that to happen. And so it's going to be really interesting to see how this evolves because a big part of like career progression is a lot of the stuff after hours, not just purely work related. So it'll be interesting to see how they progress. Keep in mind, this is a much smaller company than a Google, which has, I think, like hundreds of thousands of employees now. And so I'd be more interested in seeing how they change things, if they do change things, than these smaller companies, which is still notable. But this is the reason why they're doing what they do. If you have any thoughts or any comments about that from your space, feel free to leave it in the comments below. I'd love to hear your thoughts related to that. But from a corporate real estate side, but also from a talent acquisition side, it makes sense why they're doing what they're doing. Cool. So let's go on to the lending side. Average US 30-year mortgage rate rises this week. It's rise slightly over what it was before. What's incredible, though, is a 15-year rate is at a new low at 2.42%. I suspect the rates should hover around this level. A lot of the forecasts think it'll be by 2.7% next year. So, which is interesting because a lot of it has to do with, a lot of the activity has to do with record low interest rates. So if rates will even go down further, we're going to see even higher prices and even a busier time. So really interesting to see this, but nothing too dramatic to share. Now, what's interesting is if you look at this headline article, mortgage applications fall for the third week in a row. However, that is because most of it is actually from a refinance perspective that they have slowed down. If you look at the purchase applications remain essentially unchanged, falling by 0.2% from 1 week earlier, and 28% higher than the same week 1 year ago. And this is the 15th straight week of year-over-year gains. So from a real estate activity, from a purchase perspective, it shows that it's still going to be very busy moving forward. A lot of people are actively searching. People are, especially as work from home policies extend, people are realizing that the space that they have right now may no longer work, or they may be looking at, a different location altogether. So I suspect that the market is going to continue to be still very busy given what we see here, which is tends to be a very positive leading indicator. Now, question is, why is the housing market thriving in a pandemic, right? As I brought up many, many times in every single video, this is not an equal effect. right? The people that are working in tech, the people that are, fortunately, a lot of people here in the Bay Area are doing better than ever. Sure, the market yesterday had dropped 5%. Then again, we've hit record highs. Most companies have hit record highs as well. So people have more money than they had ever before. They travel a whole lot less. And there's a couple of reasons. One is the low interest rates makes it very, very incredible. Because remember, these are rates that people can lock in for a 15-year or a 30-year period. So people are leveraging that, because if rates do go up in the future or there's inflation, then it's really, really, really beneficial to lock in a really low rate and to be tied with an asset that will likely continue to appreciate then. And then obviously there's the other factors, which is the work from home policy side of it. What's interesting is, I'll pull up this, one of the popular requests from a lot of people is, a lot of people, especially here in the Bay Area, are dual income. And so they would want, separate office space. Like I have several clients right now, they just can't live and can't deal with their current situation of sharing a space or just not having enough. Maybe one person is working in their current bedroom and the other person is working somewhere else. So they may need two separate offices. So it could be a den and an extra bedroom, or two extra bedrooms, just so that when they're on conference calls or they're having meetings with their coworkers, that they're not interfering with one another. So this is certainly happening. And there's other amenities people like too, like especially it's been so hot recently. People love the aspect of a huge backyard, nice pool. Some may want a separate space for kids when they're going through their, work, remote learning, or a separate playroom altogether. So many reasons for a move, which is why it's causing so much activity in the marketplace. Now, the last thing I'll cover before we jump into the data itself is related to Blackstone. So a lot of people, some people know, but a majority of people do not know. But Blackstone is a massive, basically, hedge fund in the industry. And back when there was a recession of the real estate crisis, a lot of these firms became very opportunistic. And so they actually bought a ton of single family rentals. So they actually provide some sort of flooring in the areas that they participated in, but they also saw it as a massive opportunity where they could buy all these properties and just rent it out. And so Blackstone at that point became the largest owner of single families. So here you can see the data itself. I mean, they've owned over 30,000 single family and multifamily rental homes in the US and Canada alone. And what's interesting is now they're back into it. So either they see opportunities down the road already, or they already see right now is a really good opportunity as it is at this time. So really interesting to see that, which is of their activity. It was, they're building this massive scale. So it's really interesting to see these big funds come into the market already at this time. So I'll kind of track that, because I'll certainly continue to boost up prices if that's the case. Especially they're going to be likely doing it all cash when they buy homes by the dozens, if not hundreds and thousands at a time. Okay, so that was the data itself. That was the market news itself. Let's take a look at the latest data. So as stated, we always start with San Mateo County. So San Mateo County new listings somewhat has dropped from the last week, about 167. Pending contingent is much higher than it was before, but about the same level. So nothing too crazy, just shows that it's still a very competitive market. Things move very quickly. There is more that's going pending a week than there are new listings coming on the market. From a price perspective, we always look at the right side, because the right side is the current chart versus the left side. I wouldn't worry too much about the September figures, because we're only basically 3-4 days in. But you can look at how August finished. You can see August ended up to be the highest of the last 12 months. So the record time for August versus what it was before. Usually May tends to be the highest, but as you can see, summer was still very busy. Fall is going to be a really interesting time as well, given all the different things that I had pointed out to earlier before. Condos, townhomes, nothing too crazy to report, generally flat. So things are still moving. It's just nothing, there's not a big uptick or anything like that. Let's look at Santa Clara County. Santa Clara County numbers are even more competitive. As you can see, the ratio between new listings hitting the market at 366 versus the amount that's going pending and contingent, which is at 444, significantly higher that's going contingent pending than there are new listings. This should push prices up a lot more than San Mateo County, given these kind of ratios. And you can see that here in this case, same result. August actually ended up to be close to record highs. It's been relatively consistent over the months. Now, a lot of this has to do with the type of inventory. If you think about Santa Clara County, I mean, it goes all over. It can go, as expensive as a Palo Alto. It can also go, probably the cheapest, maybe closer to like probably a Milpitas, San Jose kind of area. Like San Jose, given San Jose is so big, but it's been generally high, but it hasn't been as steep of an increase. But I think moving forward, there may be, given just the amount of transactions and amount that's going contingent pending. Townhomes, condos, same story as before, relatively flat. Still moving, but just relatively flat. Let's take a look at Contra Costa County. Contra Costa County, August was very busy. This is for, I'm sorry for this. I'll have to actually get that changed. That looks like it was for Santa Clara. So we didn't get that changed, but you can see from the previous week, August still was a record high amount, still very busy. Condos, townhomes, interesting enough. I mean, look at what happened with condos and townhomes in Contra Costa. I mean, it went up significantly more than the previous month. So while San Mateo County and Santa Clara County condos and townhomes remained relatively flat, Contra Costa went up significantly more. So we're at now the record highs, given the lower price ranges, because at this level, you can actually get into a property at 3.5% down, given the prices are under in this case, average is $600,000. So a lot of first-time buyers are really great. It's really great for first-time buyers in this area, given what we see here. Let's take a look at Alameda County. Alameda County, August is a record high as well. Not as crazy as some of the other ones that we saw, slightly above what the record high was in March. Looks like September is trending upwards too. Looking at condos, townhomes, relatively similar, still a slight upward trend. Looks like about maybe a 2-3% trend month by month. Slow and steady trend here for Alameda. Now, San Francisco. So San Francisco, a lot of people have been asking, and I've been tracking it as well. So from a single family perspective, it still has been really strong, right? So as you can see, there are 378 active on the market today. We have 244 that are pending or contingent as we speak. So it's not a bad ratio. It's not as good as the other ones. It's not as good as some of the other areas, but it's certainly not bad. Things are turnovering. The turnover is still pretty strong. You can see from a chart perspective, in terms of average prices, where average price is still at $2.1 million right now. So still really strong out in San Francisco, which is about the same levels as it was back in February and March. April was a really busy month there, averaging about $2.3 million, but still pretty strong. Now, the key is now to watch the condo market. So the condo market currently has 1,143 that are active, 341 are pending and contingent. And so the market seems like it's actually doing a somewhat of a slight decline. So August right now is at 1.32 million. June and July we're at 1.4. Comparing it to February, March, we're already seeing a decline. So it'll be interesting to see if this trajectory continues to happen in September. But it looks like it's starting to see some weakness. So perhaps a lot more people are deciding to sell. We will see over time. But as of right now, there's a lot to choose from, and prices are starting to decline. So interesting to see in San Francisco. Now, Marin County, unfortunately, I think the previous weeks I did the math wrong in terms of the extraction of the data. I believe what happened was I may have done it for the entire county, but also potentially including condos and townhomes, which is why the ratios were much lower. So this time I actually review the numbers again to look at average single family houses and their prices. Most places outside of, so the places that have been red hot right now have been Contra Costa County, Marin County, Santa Cruz, generally the areas that are further out, which also has a lot more land, and a lot of people like the peacefulness of those areas. So the average right now is incredible in Marin County, $1.9 million. Now, if you compare this versus August of 2019, I mean, look at this jump. This is this is a 30% jump. It went up $500,000 in 1 year. Even if you look at comparing it to May, it went up about $370,000 from 1.58 million to 1.92 million in August. So it's went up significantly. And take a look at the number that has sold. So it's not about, people have always keep asking me, is it about, people are afraid to list, people just don't want to list? Are people waiting and waiting and waiting until COVID gets better? The reality is this. I mean, look at the number that has sold over these timeframes. In August, we have sold 1,100 homes versus August of 2019, 724. So it's just the demand levels are just so strong in these markets. It has nothing to do with supply at this time related to not as much supply versus the previous years and months. So it's more of the demand is so strong. Supply is fine. Actually, supply is higher than it has ever been. But the demand is just so strong, hence pushing up levels. And also, it's a cycle. So now people, maybe perhaps a lot of sellers are looking at this like, wow, it went up 30% in 1 year. Maybe I should sell now. So that's the fun of the Bay Area market. And hopefully this gives you some insights. I do cover the entire Bay Area. So if you or anyone you know is considering to potentially sell and leave the area altogether, it's really still hard to argue a better time. You want to do this sooner than later. There may be uncertainties coming up. You just never know. But what I do know as of right now, and from all the offers that I make on a weekly basis, things are still busy. They're not too crazy in most places. So San Mateo County, Santa Clara County, for the most parts, they'll have a couple of offers, but you're not going to expect anything too crazy. As I mentioned, the Marin County, the Contra Costa County will be significantly more competitive given the things that I brought up earlier. And then for San Francisco, I suspect there'll be weakness on the condo market. That's already happening. Single family still seems to do fine. Any questions, let me know anytime. I hope you enjoyed another episode of our weekly Friday market update. And hopefully you'll have a nice long weekend. Hopefully I'll have a day off on Monday, but we'll see what happens. Anyways, see you at the next one. Bye now. Thanks for making it to the very end of my YouTube video. If you like the content, please hit that subscribe button. Make sure you hit that little bell as well, since it'll give you notifications of when my next episode is. If you know of anyone that is considering to buy or sell a home here in the Bay Area, I'm never too busy to help more people. Always welcome to have a conversation, regardless if you're ready to go right now or if you wanted to buy 5 years later. Click on that calendar link, and then you'll be able to book an appointment with me and love to have a conversation about your situation. In the meantime, I also do have a monthly newsletter, so feel free to hit that link below, and then you'll be able to get my updates, personal updates that I write once a month in terms of what is going on with the market and some of my latest activities. Hope to see you at the next one. Thank you.